Yo, what's up, members of MIC? My name is Oscar, also known as Blackbright in chat. Today I thought that I was going to share something with you that I've been using ever since I started trading and how this has helped me to manage my risk much better. It's basically a spreadsheet. It's basically a spreadsheet that keeps track of your risk and gives you a really good overview of your risk management. So let's just quickly get into it, and I'm going to try to keep it short and simple. And for those who you just thinking, oh, is it just for shorts? No, of course, we have the long um, setup as well. So don't worry about that. I'm just going to show you real quick how to fill out and what to fill out. Basically, how this spreadsheet works. So I'm going to use ONCS as my example for this. So the spreadsheet basically works around three core areas that you have to fill in. The risk level that you're risking off, the entries, and your expectations. And then all this is some bonus stuff that I'm going to talk about, and then you get some of the real data on your right hand side. So let's just quickly fill out this spreadsheet. I should probably have cleaned it up for you, but let's get into it. So ONCS, this was a trade that I took yesterday, Monday. And basically I got into not exactly at these arrows. This is just going to be an example, but I got in around this 105 level, and we're going to use this as an example. I had my risk level up in the 117 actually. Why I chose 117 was based around that I was basing around high of day, wanted to give it some slippage, did not want to risk 115, figured that many traders would risk off that, as it's more of a round number rather than 113 or 117. So I took 117. Then first off, just right off the bat, you can see that a ton of information is given to you or is filled in automatically, which is a great thing about this spreadsheet. So what you have up here in the first column is basically this gives you quick information of what is 10% off the risk level. I use this as a guidance to basically, especially on these trades when they have already faded some, I want to see, okay, how far away is 10%, because I never want to risk any more than 10% if I want to have any sort of size. So this gives you, 10%, 7%, 5%, 3%, etc. If you want to change these, it's very simple. You just get into the formula and change the percentage that you want for it, and you can figure it out by yourself probably. Then the second column that you see, that is value, that gives you valuable information, is share size value. And what it basically does is it tells you how many shares you need to be able to have a 1K position at the risk level. So in order to have a 1K position at the price of the risk level, you would have been able to have 855 shares. If you want to see, and before you say, but I want to know my real position size, that is also included, but then you have to fill out this. So this is going to tell you what your position size is going to be as of if you had all the shares on the risk level. Then the third column, I have what I call sizing scale. Basically shows you what 1/2 of the 1K position size is, 1/3, 1/4, 1/5, so that if you want to scale in 1/5, you don't have to take out and calculate. If you wanted to keep it very simple, you just look at this and say, okay, hey, 1/5 of 300 or 3K is 500 shares. Let me enter that here, or let me exit that here. Then we get to the second like core element of this spreadsheet, which is your position sizing and fill in. This is probably the most valuable tool within this spreadsheet. So we're going to use ONCS as an example. So what this does, what it's requested you to do, is simply fill out how many shares you're entering. So let's say 500 shares at 105. Or no, even let's say I started with an entry of 500 shares at 101. Then I added another 500 shares at 105. And then let's say, just imaginary, that they spiked up even to 110. So 500 shares at 110. So 500 at 101, 15, 110. Then it gives your average. This is also provided, of course, at your probably at your broker, where you see your position sizing and all that. But then what you will get on the right hand side is valuable information such as position sizing, risk in related to dollars. So if my average entry is 105, I'm risking 117. I have 160 bucks in risk basically. I have 9.97% in risk. And then the third core element of the spreadsheet is your expectations. So as for me, I had expectations that this stock was basically going to come around 0.9. And remember that I didn't have this exactly these entries, but I haven't had an average as of 105. Then you have your risk reward, and this you can basically choose whatever you want. If you want it in percentages, or I don't know the term in English actually, but yeah, I don't know the term in English, but you figured out. You probably know it. So if you wanted to be split up in deviations, or whatever you call it, fractions. Sorry for that. So if you wanted to divide it into fractions or percentages, you can just change that by a simple setting. And so in this case, the risk reward ratio isn't that high. It's basically a 1-for-1 ratio. It's a 1 and 1/3 fraction, which isn't a perfect risk reward trade. But if you want more details of why I got into this trade at this specific point and why I decided to take on it, etc., etc., go to short recaps. I've made a short recap on that. But basically what this is, the perfect example, or the best thing to use it for, is when you start to, even if you trade something, let's say in not anticipation, but let's say you have a resistance level that you want to risk off. So let's say we had an resistance level at 120, basically on ONCS, and I want to scale in there. So when 24, as you don't want to have the slippage, etc. Then if I want to scale in, I can basically say, okay, I want to enter 500 shares at 110, because simply it's near 10% off. It's okay to start there. Then I say, okay, 5%. That's a good, you want to keep it as tight as possible to your risk. 500 shares or even 600 shares as we're getting closer. Then just 3% away. Of course, we want to, but that's based on the slippage. So 120 is our real resistance level. So probably 119. You want to up the size as well, because the closer you get, the less risk is it going to be in terms of dollars. then I recommend you doing this beforehand, before even you place the orders, because then you can see, okay, what's my risk? Is this a good risk, or do I have to basically move up my entries? Because let's say this is at 17%, let's say this is at 1, it gets 12%, and that's a bit much, and you don't want to risk $200, then simply just up the levels of where you want to enter. Keep them tighter to your resistance level or your risk level. So this is a great tool to manage your risk, and also to be aware of what the risk reward is. You want to have, like a thumb rule, you want to have a 3-for-1 or 2-for-1 minimum risk reward, unless your setup is like 95% has a 95% win rate or 80% win rate. Then you can play around with it a bit more. So that's basically what this spreadsheet is all about, and I'm just going to really quick show you long. It's exactly the same, just inverted. So let's say I entered, let's say I wanted to risk off this dip of 102. We'll give it slippage to 1, as it's a round number, or even, yeah, whatever. We'll give it a slippage to 1. Then I know that 10% of 1 is 110, 7% 107, etc., etc. And it's obvious since it's 1, but these percentage levels can be really helpful, as if you have a weird number as of, I don't know, 376, 75. Then you know that 10% off is 4, 125, 4, etc., etc., etc. So, but just to keep it simple, the risk level is 1. Share size and all that, and then you basically you just do the same. So scale in. I want to scale in if the risk level is 1. I want to scale in a 102, 1, or let's say 103, 102. Basically 1, and let's say we get some FOMO and we enter at 106. You get average entry. You base off your expectation of how high this is going to go. Let's say I wanted to go to high of day. Let's say I think it's going to be able to do that. I want to sell some before so that I get filled. So 112. Then you see the risk is 2%, the reward is 9% based off your average entry. Your risk is $11. Your percentage size is $411, and the gain potential. This is something that I forgot to mention. The gain potential is basically a calculation that is based around if you were to enter at the risk level, basically. Yeah. So if you were to enter at the risk level, let's say you get all of your shares filled at 1 and it bounces from 1, and you're expecting it to get to 12, you have a 12% gain percentage. Same goes for the short side. Here I have already changed it, so I'm basically going to change the name on the long side as well. But drop from risk, basically same thing. How big is the drop going to be in terms of from the risk level to your expected exit point? And why this is valid information and why I have added this feature is because if you see the only support is at let's say 05, then the drop percentage from the risk level is 60%. Then you can have that as a tool to start to think, is that a realistic expectation? Even though there is no support anywhere else, is that realistic for a stock to drop 60% in one day? And stuff like that. And you'll see that if you track anything, or just basically look at stocks and charts, take the high of day and divide it by the low of day, you'll see that they tend to not drop they drop a specific percentage, somewhere in between 30 to 50% at its most. So you have to, this is a good feature to keep in check if you're cover or exit expectations are realistic. And I think that's it, guys. If you have any questions, either related to the spreadsheet or anything else, don't hesitate to reach out to me. I'll answer all of the questions when I get time. If they're super obvious, I'm going to direct you to different links, etc., etc. And until then, guys, have a nice one, trade well, and stay safe. Peace.